In our last video, I covered the basics of capital gains. I covered what the capital assets are, how holding period defines whether an asset will qualify for a short-term capital gain or a long-term capital gain tax, what indexation is, and how you can use indexation or indexation calculation to calculate the cost of acquisition for your capital assets. If you haven't watched that video, the link is in the description and on the I button above. I would strongly recommend to watch this before you move ahead. So in today's video, we will cover about mutual funds and their taxation, both for equity and debt-oriented mutual funds. Okay, so now with the help of a couple of examples, let's try to understand the taxation a bit better. We'll start with the equity mutual funds, and the first one we'll do is the short-term capital gain tax. So Ramesh invested in an equity-oriented fund in June 2019, and he did an investment of 50,000 rupees at an NAV of 5 rupees. That means he bought around 10,000 units at 5 rupees each, and he decided to redeem the same in May 2020 at an NAV of 22.5. So we can see that he had these units in his possession for less than a year, and we need to calculate what will be the applicable tax on capital gains. So the cost of transfer units, which is when he sold these, and the sale consideration that he got is around 2,25,000. That is 22.5 multiplied by 10,000, which is the number of units he bought, and his cost of acquisition was 50,000 rupees. That's the price he paid to buy these mutual fund units. The short-term capital gain that comes out to be is a difference between these two, which comes out to be 1,75,000. There is no exemption available or indexation available for short-term capital gain and for equity mutual fund. So the effective short-term capital gain for him was around 1,75,000. Since the period of holding was less than 12 months, hence it was short-term capital gain. And the rate of, this will be short-term capital gain will be 15% plus cess. Okay, so that's what it is going to be. He is going to be charged, and thus the tax payable will be 1,75,000 into 15%, which is equal to 26,250 rupees plus applicable cess, which currently is 4%. If we take Ramesh example again, but this time he bought mutual funds in the month of June 2015, and his investment was 50,000 at an NAV of rupees 5. He decided to redeem the same in May 2020, say at an NAV of 22.5. So instead of buying in the month of 2019, he has bought them in the month of June 2015. The cost of transfer will be same, which is 2,25,000. The cost of acquisition is also same. Since he has held this for more than 12 months, hence this will qualify for long-term capital gain. And what will happen is his total gain, which was 1,75,000 in this case, will get an exemption of 1 lakh rupees. So that's what we said that it is. This has changed now, and any total profit, whatever has been there for long-term capital gain, profit above 1 lakh rupees will only be charged, and anything below 1 lakh rupees will be exempted. So his effective long-term capital gain comes out to be 75,000 rupees. And what is even interesting and even beneficial is that the tax rate at this particular for long-term capital gain is just 10%. Plus the applicable cess. So in this case, though his profit is 75,000 rupees, though his total profit was 1,75,000 rupees, he actually had to pay just 7,500 rupees plus cess as the tax. So we can see that in previous case, his total tax outflow was around 26,250. In this case, his tax outflow is 7,500. So in above case, assuming he would have held this for another month or two, and if the price would have remained the same, then there would have been a lot of saving on his holding, because it would have qualified for the long-term capital gain. Now let's quickly take the example of debt mutual funds as well, and we'll talk firstly about the short-term capital gain, and then we will go for the long-term capital gain. So Suresh invested in a debt-oriented mutual fund in June 2018. Investment was 1 lakh rupees at an NAV of 10, and he decided to redeem the same in May 2019, say at an NAV of 15. So the cost of transfer in this case is because he bought 10,000 units in the month of June 2018. The cost of transfer and the sale consideration is 1,50,000, because that's what the price that he sold at. His cost of acquisition is 1 lakh rupees. That's what the price he paid while buying these units, and his long-term capital gain comes out to be 50,000, which is this minus this is equal to 50,000 rupees. Now the period of holding, since this is less than 36 months, hence this qualifies for short-term capital gain, and the tax payable is as per tax slab. So if you are in 10% tax slab, then it is going to be 10% tax applicable, and if 20%, 30%, then such will be the tax applicable. So assuming that 30% tax slab is applicable for this guy, the tax comes out to be around 15,000 rupees plus the applicable cess. Now we'll go to the last example, which is the debt mutual funds with long-term capital gain. Now Suresh invested in debt-oriented mutual fund in June 2015, and his investment amount was 1 lakh rupees at an NAV of 10. So again, he bought 10,000 unit, and he decided to redeem the same in July 2019. So we can see that he sold it after a gap of around 4 years, which qualifies him for long-term capital gain, and he sold it at an NAV of 20 rupees. So his selling price in this case will come as 2 lakh rupees, which will be considered as his sale consideration. The cost of acquisition indexed will be 1,13,779. So how will this be arrived at is, we will do 1 lakh rupees, right? Multiply we will do with what we said was the CII for 2015, and divide we will do with CII of 2019. So let's just quickly go to that slide. So we see for 2015 it is 254, and for 2019 it is 289. So we'll do 289 divided by 254, and when we multiply it, we see the value comes out to be 113,779. So that's the value that we have taken. That's the indexed cost of acquisition, and now since it is more than 36 months, hence the long-term capital gain, and thus the difference or the profit slash gain that comes out to be 86,221. Now taxation for long-term capital gain in terms of the debt mutual funds is 20%, and hence the total tax that he needs to pay on the overall profit or overall gain is 17,244 plus the applicable cess. So this is how with the help of investing in the debt related mutual funds, you can earn more money, because it also gives you the benefit of indexation. Okay, so we have talked about profits, but what about loss on capital gain? It may also happen that you bought a particular mutual fund at a price, let's say for 1 lakh rupees, and due to some reason, whether the fund value went down and you had an urgency to sell it, or the quality of asset went down, and you only got 50,000 rupees when you realize the capital assets value. So the long-term capital loss can be adjusted against long-term capital gains only. So what it means is that if you have a loss, if you have incurred this loss over a period of time, right, which is greater than 12 months after selling after 12 months, and you're getting a loss of 50K, then it can only be adjusted against any other long-term capital gain. You cannot adjust this again against a short-term capital gain. The short-term capital loss, on the other hand, they can be set off against long-term capital gain as well as short-term capital gain. So short-term capital loss, if you bought it for 1 lakh over here, and when you sold 50K worth of security, it was less than 12 months. Then while trying to calculate for the net gain or losses, any other gain that you may have, be it short-term capital gain or be it long-term capital gain, you can set off these losses against that. So that can definitely happen. Okay, the losses can be carried forward up to next 8 assessment years. So when you will be filing your return, you can see over there that you will be getting options for the losses to be carried over for 8 next years. But there is a catch over here, right? You are only authorized, or you're only allowed to carry this forward if you have filed your income return within the due date. If you for some reason miss to file the income tax returns or do it after the due date, then in those cases you will not be able to carry forward your losses. So just keep all of these points in your mind. So that's what I wanted to cover today in the video about a background about capital gains, and to cover about the equity taxation of mutual funds. I will be coming with a new video very soon. Till then, बचाते रहें, कमाते रहें, because every paisa matters.